So it's relevant for lots of different types of businesses, what we're doing. And to give a little bit of the background, I guess, and I was at Lehman Brothers.
I was about to ask you. That's
a
a prime example of working capital going wrong,
yeah,
right?
exactly.
I mean, you could argue that besides the stock price going to zero at the same time, it was probably a working capital issue.
They ran out of cash
they did.
and they didn't have enough to post on for collateral for all their loans, and that's
Right.
ultimately what pushed them to bankruptcy.
It could have been saved in retrospect, but that's another podcast.
Yeah.
So you saw
let's
that
not,
happen.
Let's not go into that.
Right.
So I studied economics at uni. I went to Lehman Brothers. I was working in a private equity fund, so we were actually investing in mid-sized businesses. I spent a lot of time with financial directors of these companies, and they were all worrying about how do they manage their cash. I then, in my spare time, I thought because potentially I'd start my own little fund to buy companies. I ended up with a few friends. We went out and met lots of businesses in the UK, all over the place, and we were kind of like, what do you need? We want to invest equity in the business. And they were like, no, what we really worry about is working capital. That's kind of, debt, how do we run our business from day to day? Looked a little bit what was happening in the States, looked at, companies like Prosper, Lending Club, On Deck, which were just getting started back in 2009, 2010, or ramping up. And I sort of thought, invoice finance in the UK is huge. It's an old market done by the banks in a very old-fashioned way, expensive, rigid. It doesn't give companies what they want. It's not online. You've got to go meet someone. It takes 6 weeks to get a decision. And I said, there's got to be a better way of doing that. There's got to be a way that businesses can come online, apply, and within 24 hours figure out whether they can use us or not to access the funding. And so that's when I wrote the business plan.
And what year was that?
2010, like back end of 2010. We raised some seed funding and we got going beginning of 2011, February 2011. So we've been around for about 3 years.
Which is quite a while when it comes to a lot of companies around here.
Yeah, look, I mean, it is. And it's a fintech business, right? At the end of the day, you're involved in loans, effectively. You're effectively managing a system to get a company on board. You've got to screen them. You've got to make sure that they're real. And you've got to ensure that the money comes back. So it's not just anyone can give money out, but it's also making sure it comes back. And risk management is very important. So we felt that to go slowly in the beginning was the right thing to do, because that way you learn and you can refine your system. And only now we're really sort of putting our foot on the accelerator. We spent a lot of time learning what's the best way of doing it.
And have you guys financed yourself from the get-go?
No, we raised like a seed round, but we didn't raise that much money. We raised I think it was 600,000 pounds to get going. They put a bit more money in, so we've raised all in about 1.5 million pounds. But we've got nearly that amount in the bank because we've been making money for the past 6 months. So we were very lean. We've been profit making, great profit margins for the past 6 months, and that puts us now in a great situation because we can grow this business organically without taking on any more money, but we might take on money just to accelerate everything.
And you're hitting like 10 times the amount of loans you made in January, like the previous January.
Yeah. So this time last year, we were kind of we were facilitating about 2 to 3 million pounds per month to SMEs, small businesses, and now last month we did 15 million in a month. This month we'll do more than that, I think. And thousands of transactions have gone through the platform. Since the beginning of the year. To put it in perspective, in 2011 we did 3 million, 2012 we did 33 million, 2013 we did 66 million, and since the beginning of the year we've done over 35 million pounds. So we're kind of growing pretty strongly at the